everyone, Mark Boyer here, Boyer Financial. Welcome to the Boyer Brief. Been a few months?
Been a few months. We've been busy. What have we been doing the last few months?
Well, we moved. We actually increased and added an office space in Newport Beach here. And this is our first video recording from the new office space. Jason, isn't it fun? It's fun to have a new place and to be able to service our clients here in this area.
Yeah, it's been great. You know, we're by the freeways, so easy freeway access for people all over Southern California. We still got the Huntington office, like you said, for people that are local there. And it's just an exciting time to welcome in a new era with more space and
you have your own office now.
I know.
We were kind of cramped together, right?
But come on by and have a cup of coffee with us, or a sparkling water. We'd love to have you guys in. And so that's what we've been up to. We're getting back to our monthly videos now. Yeah. We're excited about that. This guy likes being in front of the camera. He's used to it, playing football in front of millions of people. So it's time to get back into it. But big news in the media, so getting into it, is inflation.
Yeah.
So why don't you talk a little bit about what's going on there?
Yeah, well, inflation, as we all know, you're hearing a lot about it in the news. It's highest it's been in 13 years, which is significant. We got everything's going up in price. You go to this grocery store, you go to the gas station, it's ridiculous. And it's scary. It reminds me back, a lot of us can get our minds go back to the 70s and so forth. If we're that old, it's been a while since it's been this high north. But anyway, it's something that we have to deal with, and what's going on right now. Feel like it's going to be an issue for the next year plus, especially if the Fed keeps printing money, which we hope they start tapering, which we'll talk about here in a second in regards in November. But a lot of it is supply side. There's still a lot of trouble after the pandemic of getting supplies. I know where I live in Huntington, I've never seen so many tankers. The ships that are out there are just mass. I can't even see Catalina. There's so many ships, and there's a shortage of truckers, and they're having issues there that supposedly they're trying to work through. So it's just going to take time. I would expect it to go higher here in the near term, and then kind of mellow out. Flatten out maybe next year, and then hopefully get through that following, especially if they start tapering, which we hope they do starting November.
Okay. And you mentioned taper tantrum. So the Fed has been buying up treasuries and even mortgage-backed securities for a while now.
Yeah. Since last year,
for sure. Last year. So talk about what taper tantrums mean. Like, what does this look like going into the end of the year?
Yeah, so basically the government's been buying bonds in the open market in order to force interest rates low.
Yep.
They're basically printing money and to do so and then buying the bonds. So they have to, in my opinion, stop doing that at some point. That's not good for us long term. That could cause a really major high supply money in the system, which is not, it devalues the dollar and so forth. So they are talking about cutting that back here in November, and we hope they do. We're hoping, and that would be the smartest move. But in the meantime, while they're doing it, it could cause some problems with interest rates, some volatility in the market, things like that could happen. It's called the tantrum that happens. It's going to have to work its way out, and we just have to be used to it. But long term, I think it's a much better move than continuing to go in the way we were going, right? So,
absolutely. Good. Well, those are the two big topics, I think, on everyone's mind, at least this month and this past month. But let's kind of go over market overview, what we've seen in the markets. Year to date, we've had some volatility here lately. Had our first pullback in September, 5%. In almost a year since March 2020, right?
Yeah, right. That's good. It's actually a good thing.
Yeah.
We've been talking about that in previous videos that we've done here. We need pullbacks. That's long-term healthy for the market. I know it sounds crazy. Nobody likes losing or seeing their money fluctuate the way that it does when you're invested. But if we don't have that, if you don't have volatility and it's calm, and it means everybody's in and there's no cash on the sidelines.
Right.
But still out there's $5 trillion, cash on the sidelines, and there's still a nervousness, and that causes volatility. But ultimately, it's good. It's support for the markets longer term and a positive thing. So we like that. It's part of being in the market. It's time in the market, not timing the market. That's most important. You got to be in. You got to ride it. We always encourage you just to stay calm, cool, and collected, and that way, you don't make any foolish mistakes. On down. We're looking for dips as buying opportunities in here, and but we're watching it closely, making sure that's good for the long term. We feel like that's really important for us to do.
And they say, what's that quote? They say, when the stock market goes on sale, it's the only time people run out screaming.
Yeah.
Instead of like Black Friday, everyone's running and fighting, trying to get the deals.
Yeah.
It's
the
complete opposite. Yeah, it's hilarious.
Yeah.
So again, something that we're watching.
We have to fight that. We have to fight that. In fact, I was thinking about the words of a wise man many thousands of years ago, a guy named Solomon, who was supposedly the wisest man who lived at the time. He said, as you get working on that, sow your seed in the morning, he says, and at evening, let your hands not be idle, for you don't know which one will succeed. So that's why diversification is so important. And whether this or that or whether both will do equally well. So our key is to follow that incredible wisdom of so many years, right? Is to stay diversified, to stay in the markets, but diversify is so important because we don't know which ones are going to work.
Right.
We're not super high on bonds at the moment, but yet bonds are a big part of our portfolio. People say, well, why do you have bonds in there? Well, because we don't know for sure exactly what's going to happen, and bonds provide a stable influence in a portfolio, and also you continue to get dividends that are there too. So again, diversification's key, staying in the market's key, and then looking for opportunities to buy and when things are down, when on sale, right? It's good.
So speaking of diversification, you touched on bonds already. On the equity side, there are some favorable sectors, we could say, at the moment based off of market conditions. Energy, industrials, materials, and financials, even banks.
Yeah, financials look good.
Good sectors for the time being, maybe going into the next quarter. But so talk about kind of, is there anything else that we're looking at that's in favor? Large cap,
large cap value, and even small cap, both areas that we like. The growth is still there. I think it has upside, but really the value piece with the dividends, and we've been saying this for a number of months, and we've been right.
Yep.
We continue to be right on the fact that the value place the sector is the place to be. So still like those. Emerging markets, developed, international. Those are unknown. China's putting a squeeze on everybody right now, trying to control private companies there. We've seen some stocks get rocked on the China side specifically, right? Some of these things, but again, we don't have a lot there, but good management and diversification is not a bad place to be, but we don't expect the emerging markets in the near term to be fantastic. Still like the U.S., but we'll see. We'll see how it goes, but we like the value, large cap value, small caps, and I think that those are good opportunities.
Okay.
Yeah.
Anything else? You already touched on China. Is there anything else that we're kind of expecting going into year end? Maybe some reminders for our clients, as we kind of close out the year. Capital gains, right?
Yeah.
Big thing. So just kind of touch
tax planning is a great time right this year. In some of our portfolios, there'll be some taxable, especially in some of the funds, but we're trying to do a good job of managing the tax issues. And so, again, if you have any questions, please call us. If your tax situation is way different this year, it's good for us to know. That way we can adjust and do so. But we've done so well. It's hard to sell in some of this stuff because it's all taxable. You get taxable gains and so forth. But anyway, it's a case by case. Just keep in touch, and let's keep talking about your individual situation.
And final thing, actually just came to mind. So policy change possibly in 2022, right? Tax changes, capital gains rate could be going up, corporate taxes, something we're watching. But anything that comes to mind with the taxable side of things, capital gains, do people have to worry? Or is it kind of more of an isolated issue where, hey, it's something we need to navigate and work through?
It's case by case. I think everybody is a different, again, why individual, focus for you is important, if you're in that tax. But, under this administration, the chances are at the moment is, taxes are going to go up, right? It's not a low, it's not a low tax environment for a lot of the current administration. So, if you feel like you're in a weird taxable situation, maybe we trim some this year. Next year our capital gains taxes might be higher. So something again to be thinking about, and we'd love to chat with you about that in your individual situation as it warrants, possible moves here. Again, we don't know if any of that's going to happen, but it's possible going into 2022.
Absolutely. Great. Well, thanks so much for joining us this month. Again, if you have any questions, please let us know. We're always here to help. Keep the long-term mindset. Volatility is here to stay, we think, but there are ways to navigate through it. That's what you pay us for. And just stick with your game plan. We put a plan in place. Let's just optimize it and then move forward into the end of the year.
Yep. All right. Well, thank you, everybody. Good. Again, good to be with you, and we're thankful for the opportunity to do business with you, and we're honored that you trust us that way. We don't take that lightly.
Until next month. See ya.